All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Hopefully, my voice is sounding a little bit better than the last week here. I apologize for not being on here this morning, but yeah, this is the first I've really spoken today, and probably be the last until tomorrow. Just try to take care of it, and did go get a few things, more checked out this morning and tweaked around as some of the other elements, or I wish were, getting better a little bit faster. But anyway, let's go out and take a look at this market here. Very, very interesting market right here. I don't think a lot has changed from yesterday, but we can start to build on some of those things we talked about yesterday. There are no new challenge triggers on the board right now. Just not. It's one of those things we're getting crossovers, but even the stuff that is triggered, right? Walmart, for instance, triggered, just not going anywhere, right? U.S. Steel triggered, and I know it rallied yesterday, but you look at from where it triggered, it's just not going anywhere. It's just option erosion. I think that risk is just very high out there right now for so many things, and including the signals that come in. But right now we don't have any new signals. We have a few crossovers, things like a Caterpillar, with an upside 3-7 crossover on it today. But again, it's not crossing over because of something directional going on. It's a consolidation element, and we have a lot of those out there right now. But pre-market, very interesting. In fact, this is a 5-minute chart of S&P futures. And we have the jobs report right here on Friday, and here's the low, and here's the high, right? We talked about that if the opening price on Friday gets breached, gets broken, it's going to be a little more of a danger zone for the bulls, right? Not a confirming zone for the bears yet, but a little more of a danger zone for the bulls. And one of the things we saw yesterday into the close is we saw the market sell off and break that kind of danger zone for the bulls, right? And it broke it, kind of came back up to that level, was trading up at that level most of the night last night. And then Europe opened, and that's where we've seen some of our bigger moves of late in the market, or when the European markets have opened. And, we got this sell off. Not only do we get this sell off, we get a continuation of that sell off that comes down and tests the jobs lows, right? And in fact, for a moment, breaks them. The algorithms kicked in, broke them. And then we get this hard, fast snapback, right? Which initially, anytime you see that, you go, okay, market is noting this level as something of importance, not only for right here, right now, not only for tomorrow, but for days and weeks to come. And so it kind of reaffirmed the importance of that level that we talked about yesterday. And then kind of snapped on back, not doing a whole lot, and then we get the news, right? U.S. and China, they're looking to postpone the December tariffs, and that news completely changes today, right? And what do we see? We see the market make a jump in a matter of moments, and go nowhere, right? That's been the norm for these news events, where it kind of rescues some weakness that's coming in, and sellers aren't going to sell into it, right? I mean, no matter how bearish you are, you're not looking at those reports and saying, well, okay, here's a report, market jumped on it, let me short it. That hasn't been a strategy that has paid in 2019. In fact, that's been a strategy that's gotten the shorts, clobbered a lot. And so it puts the shorts back on the shelf. It doesn't mean there are a lot more buyers out there, but just puts the sellers away. And you end up getting a market like today, which we continue to see, where, there are a few stocks that are on the move. Netflix is on the move. It's moving big here today. there's news, right? There's an analyst, in on that. But you start looking across the board, wherever there's not news or an analyst, chances are there's very little change. And even on places where there's a news and an analyst, there's some areas where there's very little change. CSX was downgraded this morning. Stock down 5 cents, right? And so it is. That is the environment right now. That is the environment right now. And will it change? Well, absolutely. Do we see signs of it wanting to change? Yeah, we do. Has it changed? No, not yet. Not yet. And one of those where I still think these levels matter. In terms of investor psychology, and in terms of the moves that are made here in the month of December, as we go forward the rest of this month. Now, something did happen yesterday that was very unusual. In fact, let me go back to Thinkorswim to show it. But we saw the market drop into the close yesterday. Not unusual, right? Just fine. We see drops. Drops happen. They're normal. And I'm going to go to a 1 minute chart to kind of just show it a little bit more. But we get this drop here in the last hour, and it is one where the magnitude on it not very big. In fact, on the day, the market was down 0.3%, 0.3%. But what did we see happen on that drop? Well, we saw the volatility index yesterday absolutely blitz higher. It was up 16% for a 0.3% move down in the market. And it wasn't like it was a big top-down reversal or anything like that. It wasn't like there was a ton of volatility. We saw the VIX absolutely blitz higher. Now, today the market's flat. VIX not really doing anything. VIX slightly lower, down about 1.5%, but we're not seeing the VIX faded. This, when we talk about the different warning signs, and we're continuing to stack up warning signs, right? At first, the first warning signs a few weeks ago, we talked about them as, hey, these deer crossing signs out in the middle of a country road where you're going 60 miles an hour, you're not exactly going to slow down for them. But now you're starting to see a lot more signs, and they're starting to come fast and furious, and it's one of those where it makes you think, well, what's going on? You're not seeing anything go on. It's not like we're looking at the market and going, oh, well, visibly, well, that's happening, and that's happening, and that's happening. But the signs continue to start mounting, and this VIX is one of those. And if we just come in and we chart the VIX, just here in stock charts, we have a market that's literally points away from a new high. And normally that corresponds to a new low in the VIX. In fact, let's chart it. Let's put it on. Let's come down here to price. We'll put the price of just the S&P 500, right? And let's we'll keep it below, and we'll click on annotate to better see it. But here we are. When the market hits a new high, oops, there we go, vertical line. When the market hits a new high, where's the VIX, right? When the market hits a new high, where's the VIX? I mean, all through these new highs, the VIX is pretty low, right? When the market hit a new high right back here, end of November, where was the VIX? New lows. Markets moments from new highs. Where's the VIX? Well, the VIX is 30% higher. Now, it's not up to August levels or October levels or some of the higher levels we saw in May, or even back where we saw in December of last year. But we're seeing a pretty strong upward tick here in the VIX, and one that is not correlated, or correlated is not the right word. Maybe commensurate with the movement in the S&P. It just doesn't measure up. It's something where it's just very different than what we are seeing. And yeah, the VIX jumped last week when the market sold off, but now that the market snapped on back, the VIX really hasn't pulled on back, right? And so we're seeing that volatility element remain higher here in the market. And that is what? It's another warning sign. Now, it's also another thing where, okay, let's say you have some upside positions you want to protect, right? Or let's say you have some, let's just say you want to scratch a bearish itch, right? Well, all right, how do you take advantage of it? Well, it's something where you can come into the VIX and take a look and go, okay, something interesting's going on with the VIX here. We're seeing option pricing get a little bit more expensive here on some things, and you could come out and you could just take a look at some VIX pricing and at the calls, right? And you go, well, last year in December the VIX got up to 36, right? Not expecting it to get up to 36, but let's just say a little bit of turmoil happens and we get up over 20. Can I make any money here? Well, yeah, you can buy you can come in here and buy a December, right? End of December, a 15 call for, just over $2. Obviously, you'd have to split the spread and all that stuff, but just over $2, right? VIX goes to 20, that's worth $5. VIX goes to 25, it's worth $10. VIX goes to last year's levels of 30, it's worth what? $15. Right? So, you're not paying a heck of a whole lot to potentially get something that is in a or that could pay off very well should there be some turmoil that happens, right? So it's not exactly expensive there. If you do go to something like the VXX, yes, it's going to be a little bit more expensive and a little more laggy in terms of response. But, even on the VIX, which typically isn't, a great pricing, right now the pricing's not terrible. And it's just one of those warning signs, just kind of like some of the others, in and of itself doesn't mean anything. Right? It just by itself, we can't look and go, well, you know what, this says we're going to do this. But as we see them stacking up and continuing to stack up, it's just one of those things where the odds start to switch. And, they're not to the point yet where I'm, going to go out and short each and everything that I see out there. But it is one of those where I just, it makes me reluctant to want to be a buyer in a very aggressive way because there are things that I would like to be a buyer of, right? For example, Netflix, right? Here's Netflix pulling back nicely. Great. Love seeing it. Nice little downgrade on Netflix here today. Great. Netflix has paid me very nicely this year buying some of these dips. And, it is one where, challenge signals aside, again, a challenge signal comes in, I'll go play it and everything else. But, buying some of these dips has paid me very nicely this year. I'd like to buy another one. Right? Is it time right now to step in and buy another one? Well, yeah, for me, just not yet. Not yet. Be a little different if some of the market metrics were holding up to the same degree, but I do have to be a little bit more cautious buying a dip with some of the market metrics, not holding up. And so what do? I sit and I wait and I go, okay, I'll wait for that first day where the stock closes above the high from the prior day. Right? All right, not there. Next, kind of mentality there with it. There are stocks out there like Bank of America. They're up near new highs, right? They continue to try to climb higher, and you say, well, who's buying these? Well, very obvious who's buying the banks. The banks are buying the banks, right? The stock buybacks on the banks are huge. They've been increased. The banks are buying the banks. They're going to continue to buy the banks. And is it something where it's fundamentally inexpensive? Nope. Or fundamentally expensive? Nope. In fact, it's in a pretty good fundamental area, right? It has a massive kind of long-term breakout on it, right? But it's one of those where I look at and I say, well, do I want to buy it right here, or do I want to wait and buy it, on some sort of pullback that comes? Well, so far, no sign of a pullback, right? No sign of any kind of real pullback coming in. And so it's like, okay. All right. Do I miss out? Do I buy a little? Do I, it leaves investors in a lot of those types of questions, right? You have things like Micron out there, which fundamentally, it's not cheap, but it's also not historically expensive. It is one of those where it's just kind of, in middle ground, just in middle ground. And one of those where, yeah, if there's no trade deal, Micron's going below 40. If there's a trade deal, it's going to 60. Okay. And you see it chopping back and forth on trade deal stuff, right? It's not really moving on anything else right now. And you have a lot of that out there in the market right now. It's an environment that for option traders is very difficult to be patient. Very difficult to be patient. And it is an environment that, you tend to see option traders get caught up into very aggressively. And ultimately what happens, they end up, getting their finger sliced off, not because the stock goes big against them or anything like that, but just it's death by 1,000 paper cuts where, implied volatility and time decay just come in and clobber. And from day to day you can get some pops and drops. And yes, the short-term day trader type, fine, but I'm just talking about, swing option trading, that many of us here, enjoy and do. It is most certainly more of a time to be patient than to be aggressive. And, if you're looking to scratch an itch, taking a look at something like the VIX or, scratching that itch with a singular position on a market position call where, you say, hey, I'm convinced this market's going higher. I don't know when, how, whatever. And you put what you're willing to risk, right? That's the nice thing about about options. But if you're in there each and every day going, what does this mean, right? Meaning, you go out and you take a look at Caterpillar stock and you're asking yourself every day, Caterpillar did this. What does it mean? You're going to be in a very frustrated type of situation because most days just doesn't mean a whole lot and has no implications to what's going to happen in the future. Here with Caterpillar, and there are a lot of stocks that are like that and continue to be like that. If you have to jump in, something to the upside, you take a look at something like Bank of America where okay, there is a buyer here. And you say, all right, it's had a couple-day pullback. All right, I'll buy it. Today's low is my stop point. That's what I'm willing to run with, and you go, right? You pick out a mark and you go. And you can manage through those. It doesn't give you a lot of help as far as the exits, right? That whole thing is, well, if it pops tomorrow, then what do I do, right? Do I take it? Do I run with it? What? And in a market like this that really isn't getting a lot of follow through to things, that becomes, quite difficult because the second you say, well, I'm just going to take the initial pop, the stock really gets a big follow through and you go, oh man, I was in and I missed out, right? But it is one of those environments where, be a little patient and, it'll switch up. It'll switch up quickly and aggressively when it does. And, they'll will create, more volatility, more opportunity, for the most part. But right now, it continues to be a lot of option risk. And with the implied volatility, with that VIX jumping a little bit, the risk of this bleeding on down with the market going nowhere is high. And what does that mean? That means individual option values are going to go the opposite direction of what a long option player wants to see. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you tomorrow. Take care.